Let's look at the overall markets, because we saw some pressure coming through in yesterday's session. No surprise there, given that we have seen incredible gains coming through for the NSE 20.
I believe the market is actually at a critical point because of most of the companies that have been releasing the results have been very impressive, and many people expect the market to respond positively, and go forward, be bullish, have the specific counters like Safaricom, Equity, Kenya Commercial Bank actually, doing better because of the fundamentals in the results. But unfortunately, our market doesn't actually respond to fundamentals. It more or less goes with the current affairs and human sentiment. But I'm positive that what's been happening, the market is a bit bullish. The only problem is the political cloud actually hanging over in terms of the the build up to the referendum for Kenyans in need of a new constitution. That's the only thing. But I believe investors are confident. Local investors are actually getting back into the market for gains. And I think what happened yesterday with the release of Safaricom results, we should be able to see more positive gains at the market.
Well, looking at Safaricom's results, quite surprising that the stock didn't really move upwards, given the fact that the results came in better than most investors had expected. Why do you think that is? We did see obviously very high volumes, but not enough to push the stock higher.
The biggest challenge to the market is the investors, because I believe there are two kinds of investors. One, you get into it thinking that when a company releases its results, the dividends will be higher. And two, you get into it with a lot of money, which means high turnover, which means more profits. But with Safaricom, we've realized that it has a lot of retail, holders, and the announcement that probably, they'll pay 20 cents per share in terms of dividends didn't go down very well with them, because most shareholders have maybe between 200 and 500 in terms of shares. So that's in terms of cash, that's very little money. But also we need to understand that the results didn't really have any impact, because whatever was released yesterday has been in the public domain for many people, because of the foray and growth of the IT, while we're able to actually be able to get information faster. And I think the release of the result basically just affirmed what many people know, that Safaricom is a dominant leader in the telecommunications industry, and going the way forward, especially with their data business. It's the leading company. Well,
Steve, from a regulation perspective, because we're also hearing that the regulation has been put on hold at this stage, and we know it was going to be relatively negative for Safaricom. Surely that should be an extra boost?
It should be an extra boost for Safaricom only, but unfortunately it casts aspersions to the legal industry in this country. As a lawyer, I think the PS shouldn't have called in foreign experts to actually be able to handle in the laws pertaining to fair play. I think we have competent lawyers in this country. We have competent law firms that can actually be able to handle and be able to elucidate exactly what these regulations are all about. And I think at the end of the day, the other stakeholders, Zain, Orange, and you, their views need to be considered. Because when you're looking at the margins Safaricom is making, then you look at the closest rival, which is Zain, in terms of returns, in terms of profits, in terms of our customer growth. The disparity is so huge that you might actually, the need for regulations is there. So the question is the interpretation of the same. But for us to call in international lawyers actually goes ahead to show that our Kenyan lawyers are in need of more training, which is not true.
Steve, looking at the East African Community Partnership, that's also changing the landscape quite extensively, because they're due to present around 4.5 billion shilling budget. What do you make of this news, and how is this going to impact sentiment in Kenya?
Many Kenyan businesses actually worry in terms of paying more taxes for the East African community integration. In a matter of days, the dream will actually come true. We'll be able to cross freely, transact business across the borders freely. But the problem is we're worried in terms of we'll end up paying more taxes to sustain the deal, because the moment you're the biggest economic hub in the region. But I believe the budget is actually good news, because as you put it, infrastructure development is key to success of the integration. Without infrastructure development, without roads, without proper IT infrastructure, without proper logistics in terms of handling the tax protocols, handling the foreign relations, the agreement will actually not go through. So I think it's a positive step towards the achieving of the dream. The only question is how Kenyans are actually going to take the tax regime, because I believe as a businessman in Kenya, I'm feeling that I'm going to pay more taxes compared to the Ugandan businessman or the Rwandese businessman.
Of course, and that leaves less money in the hands of the consumer at the end of the day. But Steve, looking at the overall equity markets, because we spoke about it earlier, looking at the sentiment that's been driving the Kenyan markets, there's a lot of positivity. We've been seeing incredible gains coming through. Things are starting to look slightly toppy. Do you think there's more room for growth, given that there has been such a big focus on emerging markets, and Kenya is offering fantastic growth and, of course, a great inflation rate as well, and fiscally far more prudent than the likes of the developed world?
That's very true. And what I know is that with the positive sentiments actually coming in, irrespective of how the political situation goes, the gains at the market are actually going to keep growing, because we're looking at, basically we've recovered from the problems that we've experienced in the last 2 years. The government is actually keen on ensuring that the stimulus package that they released last year is actually fully implemented. We're seeing the backbone of our economy, that's the agricultural sector and the tourism sector, actually picking up significantly. And we've seen results released by the Ministry of Planning on the business that are actually picking up. And Kenya is actually counting on more free trade with the East African partners, especially in terms of telecommunications, in terms of infrastructure, in terms of tourism. And at the end of the day, in as much as not so much has been said about the World Cup, we believe that most of our industries, Kenya Airways and the tourism sector, are actually going to benefit more from this. So the equity market is actually going to be more positive. We're seeing more people having more confidence to invest in the equity market.